This meeting is being transcribed. This meeting is being recorded.
Welcome, everybody. I appreciate everybody coming in today. For our committee day. We're meeting here in Nashville in our conference room 1A that has not been updated yet, thankfully. and we appreciate everybody coming in a little bit early to have an executive session. And so we're going to go ahead and get started. We are missing Larry Elmore and Kevin Monroe and Dr. Pam Church, and I think Pam was going to try to call in, and so she may jump in on the phone here in a few minutes. Larry and we'll try to call in tomorrow. Oh, is he okay? Hello, Larry. Welcome. Glad you're here with us. We're missing you here in person, buddy, and we think about you a lot. And then Kevin has had a conflict for this meeting and told us in advance, and we certainly miss him, but understand that he's doing some good things in DC. So with that, you want to go ahead and get started with licensing, and now we'll turn it over to our chair, Mrs. Booker Davis.
Thank you. We had 3 items on the licensing committee agenda for today. The first one being considering the FINRA Series 24 exam for approval for CPE. And this exam measures the degree of knowledge that a principal who supervises in the broker-dealer arena. There are 5 major job functions, and they're listed in the meeting information that we received. Supervision of registration of broker-dealer and personnel management, supervision of general broker-dealer activity.
Pam Church.
Welcome, Pam.
Hi, Pam.
Hello. Hello. Is this the best
now
way
joining.
to join, or should I join by team?
Karen says you're on the Teams meeting.
Okay, but I mean no video. You don't need video.
Oh, no, that's okay.
Good. Okay.
Pam, I was just starting. This is Janet Booker Davis. I was just starting going over the items under the licensing committee and talking
Okay.
about the FINRA Series 24 exam request for approval.
Yeah.
And I was going through the major job functions, continuing in number 4, which was supervision of trading and marketing activities and supervision of investment banking and research. The exam is 225 minutes, 3 hours, 45 minutes, and that translates into 17.25 hours, which is 5 times the amount of hours spent on the exam. And there is a limitation that it can't go over 50% of the hours needed. So what we're considering on this committee today is approving this exam for qualification for CPE. There was an attachment to the information that we received and some other FINRA examinations that were included on the backside of that information. There's FINRA Series 52, 63, 65, and 66, specifically related to FINRA types of exams that we've approved before. I personally have taken the 63 and 65 examinations, and I found those to have good knowledge related to business and useful even as a CPA. There was like a 30-page document that I think Wendy pulled that document up, and I pulled it up as well. And I was trying to see if it had more detail about the Series 24 exam. And it did look like very specialized knowledge. It did list out several related FINRA exams, none of which I don't think were any of these that were included uh, on the FINRA exams that we previously approved. Um, so to me, this seems very, very specialized and mostly related to supervising people in the securities industry and maybe not so much related to accounting, auditing, tax, or IT types of areas. So, any discussion from the committee members?
If we have the other FINRA exams that we allow, I would say we would probably allow this one too. I would venture to say not many people are going to use it because it is so specialized. It looks like it's a supervisory role. I've not heard of it. I have the 6 and the 63 myself also, and those were difficult enough. So I would say yes.
I agree. It doesn't seem very different from what we've approved in the past.
Well, I didn't think it was as related as these other FINRA exams myself, but that's my opinion. Do
Wendy, what other exams have we approved? We've approved various exams, haven't we?
So in the documents, there is a list of all the exams we've approved, and the FINRA exams that have been approved include the Series 52, 63, 65, and 66, and then the General Securities exam Series 7. My understanding is that folks that take the 24 are the supervisors
right,
of the Series 7 folks.
right. Are any of these other exams more related to management types of activities in other areas? Because that's mainly what this exam relates to, is management of securities licensed professionals. I don't know if there's any that we've approved that would fall into that type of category.
I'm
Well,
looking.
am I looking at, go ahead.
No, go ahead.
Haven't we done, go ahead, Wendy, sorry.
Oh, I was just going to have you go ahead, Pam.
This license,
We've done project management and things like that. Is that different? I mean, as far as how far it deviates from just plain old accounting?
I would think project management kind of relates more to the types of things we do. Life office management, I see that one. I'm not sure what that one is. Is that like insurance?
Vaguely, I thought that related to employee benefit plan area, but that's just a vague recollection.
Oh,
That may not be accurate.
I guess that would be the only concern I would have, is that it seems like it's more related to management and of a different discipline and not so much with what we do. But we have one motion or any more discussion?
I would move that we accept it.
I'll second.
Okay, we have a motion and a second. All those in favor?
Aye.
Um,
Oh,
we're good.
Oh,
do we have to do a roll call?
oh, okay, we need to do a roll call. Okay. Karen, want to do a roll call?
Janet Booker Davis,
No.
Pam Church,
Aye.
Brad Floyd, John Griesbeck,
Aye.
Rob Vance.
Aye.
Okay, the ayes have it, so we'll recommend as a committee that this be approved at the meeting tomorrow. The next item on the agenda is another one, a request for approval for CPE. This one relates to an accreditation for business valuation and certified valuation analyst. The AICPA sponsors a certification for the ABV, the Accredited Business Valuation, and the National Association of Certified Valuators and Analysts, and I think maybe another group sponsors the certification for the CVA, the Certified Valuation Analyst. This one also would be limited to 50% of the hours, and the exam is a 5-hour multiple choice exam. It translates to 25 hours of CPE. There was some information attached to this summary as well, and just looking over the core body of knowledge that we were provided, it seems quite relevant to the kinds of things that we as CPAs do. Anybody else have some comments or discussion?
If I may, I have both of those designations, and I would say they definitely are exactly the kind of thing that we do, and they're not easy to obtain. I think the ABV is a 6-hour exam, and CVA, I verified that. The CVA says it's 5 hours. I seem to remember it being a lot longer than that. Mm-hmm. But yeah, I would highly recommend these. I'm surprised that they're not already part of the curriculum.
I know I've had work with clients and, wanting some type of valuation, not that I did it, but this type of knowledge seemed like to me that it would be very relevant to the kinds of things that we would run.
And I think we've been pretty, not, maybe the word's not lenient, but we've been broad in our interpretation. I know what you were saying about the last one, Janet, but I think that this one is in keeping with what we've done in the past. So I would vote for accepting it.
Any other comments from the committee members?
Jan,
Yes.
I just want to be clear when whoever offers the motion that we're clear that there's two of them here. We put them together because they are very related. And so just thought that might be easier where the FINRA was a different.
Yes, I didn't, I knew Janet, if you're saying that to me, I knew that Janet's concerns were about the first one.
Okay.
And I was simply saying that, I think for both of them, they don't have to fit the mainstream of accounting. I think we've been pretty broad in our interpretation. So I'll just go ahead and say I move that we accept the second one as well.
Wendy, did you have another comment?
Right. So on this particular agenda item, there are 2 exams here that we're requesting approval for. So in the motion, I'd like to make sure that the motion
includes both.
Includes
the
please,
ABV
please
and the
name
CPA.
both of them. Yes.
Okay. Pam, will you repeat your motion and include both of those?
It sounds like I'm messing it up, but okay. So I move that we accept both of these exams, the ABV and CVA. Is that right?
Yes. Is there a second?
Second.
Okay. All those in favor on the committee of approving both the ABV and CVA exams for CPE? Oh, we'll need a roll call. I'm sorry. Go ahead, Karen.
Janet Booker Davis.
Aye.
Pam Church.
Aye.
Brad Floyd.
Aye.
John Griesbeck.
Aye.
Rob Vance.
Aye.
Okay. The last item on our committee agenda for today relates to a one-time credit relief initiative that NASBA is sponsoring. And I think they held webinars in September, two of them. I think one on the 7th, one on the 11th. I attended. I hope,
Little construction going on.
yeah.
So
I attended the one on the 11th and found it to be very informative. And the main thrust of this, I think, is to approve this initiative because of efforts to improve our pipeline. And the recommendation is to consider individual candidate requests to extend credit through June 30th of 2025 for credits that expired January 30th, 2020 through May 11th, 2023. And I think those dates are closely tied, it's not exactly tied, to the national health emergency related to COVID. Now, our rules that we've been doing our work under, and we've been approving extensions on a case by case basis. And if they were showing some reason for having lost the credit, um, whether it were medical or travel related, some other type of reason that we thought worthy, we did approve extending credits. And there's some Tennessee specific information in our handout related to sections that were lost by candidates. Whether it's one section, there are 259 candidates impacted. Uh, Candidates who lost two sections, 97. Candidates who lost three sections, 19. So in total, there are 375 candidates in Tennessee specifically who would be affected by this relief if they could get the relief. And then some other information relates to incompletes or dropouts by year. And looking at 2020, 2021, 2022, the trend was increasing in terms of dropout during the period that COVID was going on. And on the back of our information, there's some extension history for credits expiring April 2020. We have given extensions from April to December 30th and December 31st of 2020. That was in May that we did that. In January of 2021, for credits expiring December 31st, 2020, we gave some credit extensions to September 29th and September 30th of 2021. Is that correct how I'm stating that, Wendy?
To be more exact, it would be credits expiring December 31st of 2020 through September 29th of 21 were extended to September 30th of 21.
Oh, okay, thank you for that. I think there were 34 candidates of the 375 that was under the Tennessee specific information that could be impacted by this relief. And also there's some information regarding what other jurisdictions are doing. 33 haven't voted yet. 33 jurisdictions haven't voted yet. There are 6 jurisdictions that have adopted to extend this type of credit extension en masse. There's 6 jurisdictions who have already adopted that. There are 6 who have adopted extending the relief on a case-by-case basis. One jurisdiction has adopted this through a rule change, and one jurisdiction so far has adopted this through a specific initiative. And 6 jurisdictions have no plans to adopt. Um, to me, since we've been doing our credit extension approval on a case by case basis, um, to do this in mass seems that that could get us into a situation of being inconsistent with how we've done it in the past. And um, the recommendation, I think, is to do it either in mass or on a case by case basis if we were going to offer the relief. I think doing it on a case by case basis with some review for if we've given some relief in the past um, would could be appropriate. And let's see. So what we're trying to decide today is one, if we want to extend this relief, this type of relief to candidates, and also if we would want to give our executive director the authority to approve these requests, and I suppose also how we might do that. If there would be some type of form that would be filled out to document the request, and and how we would go forward with that. Wendy, you want to make any comments before we?
I think you did covering it.
Okay.
Questions?
Okay, yeah. So any comments from the committee or other board members?
I have a question. So are you just going to notify these 375 people that you're eligible for this type of relief, or how's that going to work?
So NASBA has offered to do that. So because these people haven't come to us for licensing, these are just candidates. They have that data and they have offered to work with us to notify those individuals that it would be an option if the board approves it.
This may be a dumb question. Maybe I'm logic if this is wrong, but if we have some people who had exams early on in that process, early on in that date, and 18 months have passed since they started retaking exams, or what, they took another, and then we got more than 18 months now in between early on in that period and later on in that time period. How's that going to work?
Well, I think that's one of the complexities of this.
Yeah.
You know, some people have gone on and tested, some have passed, some have gone on and tested multiple times for the same sections. Maybe they had a passing score that expired, but they've retested and failed. So there are a lot of complexities going, and every situation is likely going to be a little different.
I mean, you're going to have to do this on a case by case basis anyway. You are, right, or your office, because it is. There's no easy answer for each one of these. Doesn't sound like.
I would agree.
Yeah, I think that's right as well. And since we have been doing it on a case by case basis, then it makes it even more complex, I think. And Wendy, did you have an example maybe of one that how this might work, so that might shed a little more light on?
So I have an individual actually that presented her case to me this week. I don't know if anybody has a pen or wants to write this down, because some of these details get very complex. But she has credit for audit and reg that doesn't expire until 24 or 25. Her FAR is expiring tomorrow. And so she was attempting to get in to take BEC this week before her FAR expired to try to get a passing score. When I looked back at her history, she actually passed BEC in 21. So she would fall into this category where she had previously taken it, but it had expired. So if you were to approve something like this, then she could likely come back and request an extension under they're calling it the CRI, Credit Relief Initiative, the CRI initiative. And if approved, she may not need to sit for another part. She could get approval to have that extended, the one she took in 21, be extended until June of 25, and that would give her 4 passing scores at the same time.
So in that example, you would have the authority to extend that FAR score. I think that was the one that's getting ready to expire
So that's where it
tomorrow.
gets more complicated, because the one that expires tomorrow would not fall in the date range that we're talking about. But at the last meeting, you all gave me authority to give up to 12-month extensions to folks that were expiring this year as we transitioned from 18 to 30 months. And so that would apply to her FAR score. So it gets complicated.
My comment would be, I would think we would want you to handle that administratively versus bringing 30 cases or whatever to the committee meeting. I mean, that would be my thought.
Question to you: are there situations in which you believe that these would be denied, or is it the committee's thought process that as long as they state that they have a case, or that they have had an issue during this time, whatever that may be, is that acceptable? Or would you expect documentation consistent with how we have handled extensions in the past?
I guess I was thinking that under this specific type of relief, which I think is the intent of NASBA, that if they fell within this national health emergency timeframe, that's their reason.
Okay.
And as long as they could give that as a reason, then they could get that relief. And if we had the documentation like we've had in the past, and including credit relief that we've given in the past, which kind of throws us into looking at this on a case-by-case basis anyway, then you all could continue to handle it.
If somebody else has something to say, please jump in. But okay, so it sounds like if that's the reason,
Mm-hmm.
and then that may be also the reason that they took this other exam that's getting ready to later on that's getting ready to expire. So it's almost like they're related. They could be related. You know what I'm saying? That FAR, like in that example, that FAR may have been taken because she thought
Yes.
she failed the other two. The other two had expired or something along those lines.
Yeah,
So,
I mean, very well could be.
right. And
Right.
so is that if that's their answer, I would think that we would accept that then, because we're just blanketly accepting the ones during COVID. So I would think that'd be some complexity that your office should handle. So.
And we have specific time frames that fall within the national emergency. So you would have that as a guide to do the credit relief. Did you have something, Andy?
Well, I was just going to say that as long as I agree with you, as long as it fell within that time frame, I felt like that's what we were proving. The fact that they had, the fact that we made somebody come up and give us a reason documented as to what happened before, that would be out the door. That it would just be it fell within that time frame. And then with the new rule coming up that we're going to talk about, if the extra year will be added on a case-by-case basis. In this case, it would not be logical to hurt somebody that we knew we were going to change a rule on by not allowing that. And so they could request that, and thus both could be met, and it would be fair given the changes that we're fixing to make or voting on now or going to make with the rule change.
That we're on the same page, that the rule that we're under, there has to be a showing that the credit was lost because of the circumstances beyond the candidate's control. I think that's within the context of what everybody is talking about, but there does have to be that showing that the credit was lost due to circumstances.
So they could the candidate could continue to request as they have in the past, and if we had some standard form to do that, and one of the reasons for the request being the national emergency, then that would be a valid reason to do the credit relief, and we'd have the documentation that would provide that showing.
They provided that document, that
Yes.
support for that. then
Yes.
I think that would be fine. And it has to be in, I just want to clarify this too. Our rule talks about particular cases, and there's been some talk about en masse. I wouldn't recommend that you do an en masse, and I don't think that's what you're talking about, but I just want to clarify that because it does say in particular cases
Right.
in our rule.
And that keeps us consistent and I think better able to manage what we've done in the past with what we're trying to do in the future. Yeah.
So Neil, is it your opinion that if they were to simply state on a form that they lost credit during this time and went through some hardships, that would be a showing? They don't necessarily need to provide a doctor's note that they were sick or that some sort of documentation of the hardship.
If they were to provide, I think ideally I would want to see something, a signed statement, an affidavit. I mean, we're talking about a burden of proof that's a showing. That's not really a term of art in legal terms. We talk about preponderance of the evidence, clear and convincing, beyond a reasonable doubt. This is a showing. I tend to some evidence. Knowledge has it to like a probable cause. Is there some evidence? So if they're saying and they're signing their name to the document saying that because of COVID I lost this amount of credit, then I think that would be in the board's discretion to consider that as a showing.
I'm not sure.
May I ask a question?
Go ahead, Pam.
I mean, I was not able to apparently remote access wasn't available to the earlier meeting today, but so I'm a little bit confused because my understanding is that the whole idea here is to state that is sufficient reason, just the fact that of the timing. So I get, the case by case, but I just don't want anybody to lose out on this because they didn't word something correctly. So will you clarify a little bit about what you're saying as far as what they need to show?
Just going back to the rule that there has to be a showing, meaning the candidate has to show that the credit was lost by reason of circumstances beyond the candidate's control. So the candidate does have to show that rule.
Oh, are you saying then that this national emergency is not reason beyond their control? The candidates had no control over COVID.
No, I'm not saying that. They would just need to, I think, some evidence that they lost credit
During the national emergency time frame?
Right. Could be an example of evidence of that could be, for instance, a statement by them that they lost evidence because of that.
And they
And if
typically
the-
provide.
But we have that.
Yes, and actually NASB's come up with a form that they're using for some states, and we can play off of that. And I have it in front of me. But, the way they've worded it is they would check a box. The candidate would check a box for the reason you're requesting credit relief, and it would be medical, economic, family, education, or travel, as stated in the recommendation. They would check a box, and then it gives them a box to explain their situation. And then, if Neil wanted us to add some wording like the above is true and correct or something like that, and then they sign it and submit that form, then I think that meets what Neil is talking about.
But I'll just say this as well.
What?
What you're talking about, the proposal in question, doesn't change anything. Even if you vote on it and approve it, you're already allowed to do this under our current rule of 0020-01-.066C. You're already allowed to do everything that you're talking about here under this proposal.
Right,
This
as
is
long
not
as,
going to give you any additional authority than what you already have the authority to do.
and as long as we have the form that you're talking about and the reason, and it's pretty much what we've been doing.
Are you
What
saying-
were the 5 categories?
Go ahead.
Pam, to answer your question, the 5 categories are medical, economic, family, education, travel disruption. I believe those come from the recommendation.
You believe what?
Those categories come from the recommendation.
Okay, so which one does the COVID time period fall under?
Okay, let's go back to the recommendation. So the recommendation says, in response to significant health, economic, education, and travel disruptions. And so
I see,
we're
okay,
just listing those on the form
Yeah, I see.
as one
Okay.
of the areas at which we're,
okay,
we're considering hardships.
gotcha, all right.
So are all of those on the form in one area? Or is it like,
Yes.
okay, yeah. Okay, that makes sense, yeah.
Now they added family, and family's not in the recommendation. So I don't know that that's.
I guess if there was a family, health, economic, or travel issue, maybe.
I think probably what this boils down to, as Neil said, you have the option to do this and the authority to do this as a board all along. We've done extensions, several of them. And probably the key here would be giving staff authority if it falls under this particular recommendation, give staff the authority to handle these so that we don't have to bring them to the board.
Well, this has been a long time coming with lots and lots of debate. Several of us have been on different committees that have dealt with this. So it seems like we have two purposes here. One is, are we adopting this? And number two, to me, is, Wendy, to make sure it's not just so overwhelming as a burden to you and your staff. So I would think, however we structure it and communicate it to the people affected, that we take care in setting it up for minimal deliberation and communication.
I think that's the only. I don't know that we can get there. Meaning, if you have 300 people,
it's going to be tough.
If you have 300 people requesting this, everyone's a different situation with people that may have parts that don't fall in this time frame, so you have to evaluate those parts too.
Okay.
You have probably people from before the time period that are going to ask, do they qualify? So it's. I don't think no matter what you do, it's going to make it easy, unless you choose not to do this.
Yeah.
But
Okay. So you've got a job ahead of you.
Is there more discussion from the committee members or board members? Seeing none, do we have a recommendation for a motion or motion? Anybody want to make a motion?
So moved.
In the motion
Yeah.
first.
Oh. I recommend, or I move that we accept the recommendation for the one-time credit relief initiative as explained today.
And then the second part would be giving the executive director authority to approve the request. Is that?
Well, right. I mean, that's in this memo, but I would say yes, and give the executive director the authority to approve such requests in accordance with the above recommendation.
So your motion basically is going to read the recommendation in response to, in that entire paragraph there.
Correct. That entire paragraph, yes.
Okay.
And I can read that if you want me to read that. I can, but
no, I just want to make sure that that's my understanding of the motion. And
I was unclear.
And then the last sentence there under that recommendation added to it.
Correct.
Okay. Subject to
should the motion
what about what you want, Neil, as far as a signature on a form
kind of documentation
to document it?
Neil.
Right here.
When Wendy and I are talking, as we inevitably will be, about these individual cases, and I'm giving her legal advice, I believe that we can handle that.
Okay. So we don't need that in the motion.
I don't believe so.
Okay. All right.
Does the motion need to say on a case-by-case basis?
As
Or
long
to be
as,
administered on a case by case?
no, because it has to be on a case-by-case basis per our rule.
Okay,
The rule.
okay, sounds good.
Okay, so we have the motion as recommended in our handout. Is there a second?
Second.
Okay, we need a roll call. Karen?
Janet Booker Davis,
Aye.
Pam Church,
Aye.
Brad Floyd,
Aye.
John Griesbeck,
Aye.
Rob Vance.
Aye.
Okay, that's all for our committee, Mr. Chairman.
Thank you, Madam Chairman. And just thank you and your committee. Our 2023-24 committee, as Janet pointed out, is Janet Booker Davis is the chair, and then we have Pam Church, Brad Floyd, John Griesbeck, and Rob Vance for that committee. A couple of just points I probably should have made before. I had the ability, or I guess I had the ability to go back and listen to our voice recordings from our last board meeting. Has anybody here done that?
Partially.
And I know Gay did when she was doing the minutes. To my horror, I discovered that several times people could not be heard. And so I want everybody here to remind everyone when you're speaking in front of a mic, including me, that speak clearly into it, speak closely to it so that we can hear the recordings, or if other parties want to hear the recordings after our meetings, that they can. Because I really had a tough time with some of the communication and talk we had when motions were being made. And so just kind of point that out right now. Our next committee is going to be laws and rules. Mr. John Griesbeck is going to be our chair this year with Janet Booker Davis, Pam Church, David Crenshaw, and Gay Moon. So that'll be our 23-24 committee for that. Now we'll turn that over to Chairman Griesbeck.
Thank you, Mr. Chairman. I'd like to first just acknowledge the good work of Mr. Elmore in chairing this committee the last couple of years, and all the people that participated. Thank you, Larry. We have two items on the agenda today. The first is regarding granting our executive director authority to approve certain examination credit extensions. I know you thought that was done last time. We'll talk about that. And then the second one is to look over revised discipline matrix that has been worked up as we requested. So regarding the first item, the 12-month extension, you might remember that NASBA suggested that state boards grant executive directors authority to do 12-month extensions until the 30-month rule becomes effective. So in July, this committee recommended granting this authority to the executive director. At the board meeting, there was a motion made to accept the committee's recommendation. The recommendation was also then amended to specify that extensions should be evaluated based on the criteria for extensions presently used by the board. There may have been some discussion, but in any event, at the end, the vote was taken to approve the motion, but it's unclear whether the vote was for the original motion as amended or the amendment as originally put forward there. So we feel like the proper thing, of course, now is to make a new combined recommendation to the board for its consideration tomorrow. Any questions so far related to that?
Mr. Chairman, just a clarification, both of those motions were seconded too.
So I would like to, if proper, make a motion that will include the combined elements, and that is to recommend, a motion to recommend to grant authority to the executive director to approve requests for examination credit extensions of up to 12 months during the transition period before the effective date of the revised rule, and to specify that extensions should be evaluated based on the credit for extensions presently used by the board. a second?
I'll second.
Discussion? I'll just clarify that we basically combined the two from before. Wendy, did you have something?
I would just like to clarify for everyone here that I have not received any requests and have not approved any under the previous vote, no vote, until this week. So kind of no harm, no foul on the situation. And so we'll be able to consider some after the board's consideration tomorrow.
We have a second. Any further discussion? If not, Karen, can you take a roll call?
John Griesbeck,
Aye.
Janet Booker Davis,
Aye.
Pam Church,
Aye.
David Crenshaw,
Aye.
Gay Moon,
Aye.
The second item on the agenda, as I mentioned, relates to the discipline matrix. We had a discussion, I know at least at one meeting, maybe the last two meetings, about this as we deliberated on certain cases and said, well, have these been looked at in a while? Should we consider or reconsider some of the penalties? And so our executive director, we asked to review this for any changes deemed necessary. You have a copy of the proposed changes in your materials. A couple things to mention. The first page, which deals with guidelines for the civil penalties, has not changed. It gives criteria for aggravating factors, mitigating factors, and that type thing. So there's been no change to that. What follows is a matrix listing out all the different statutes and rules, which I guess could be violated potentially, and a description, brief description of the violation per the statute or rules, the penalty range, and let me just go ahead and say that that penalty range of $0 to $1,000 applies to each of these different violations, and that is set in our current rules. I think statute probably just provides that we can impose a penalty maybe, but these are set, this 0 to 1,000, so we have to keep that in mind as we take a look at this. Then there's mitigating factors, what the violation might be, and it's sort of an incremental across the page approach in the three columns, and then the normal violation without mitigating or aggravating factors, and then finally would be if there are aggravating factors present, and then a few comments off to the side there. And so what you'll see is sort of a redlined approach to where a lot of them have not changed. There are certain dollar amount changes, and there are also certain changes as to not a dollar penalty, but potentially a revocation or suspension of someone's license. And you'll remember too that this penalty range is a potentially per day. I think it sets that out on that first page. Each day of a continued violation may constitute a separate violation. And or if there's more than one violation, sometimes we may have a larger penalty or a combined penalty there. Wendy, any other thoughts maybe on the front end that you want to give related to the matrix, how you went about it, some of the proposed changes?
One of the quickest things I learned in the exercise, and I did know this, but as you just mentioned, the rule allows us $1,000 per day per violation. So nothing on the matrix can exceed $1,000. That doesn't mean the board can't assess additional monies, but you have to be able to show that there were either multiple violations or multiple days of a violation. And so that's why you don't see some of these rising to $2,000 or $5,000 or something of that nature. That would be the reason. The only way to change that is to go through a rule change, where you would request a rule change to change that range or that ability for you to do that. And so that's why some of these changes are limited on here. But basically, I went through and looked at it incrementally, as you mentioned, John, and kind of looked at what we've done in the past or most recently with some of these, and tried to make some changes or suggested changes that make sense based on what we've done recently. Only one that I basically reduced was on the second page, conviction of a felony or of any crime or element of dishonesty or fraud under the laws of the United States. That used to be an automatic revocation, but because we have to impose the Fresh Start Act on many of those, sometimes we don't go all the way to revocation. It's not an automatic. And so I reduced that first on the mitigation side to a suspension as being an option for us. Most of the others, you will just see some incremental changes in penalties.
As I went through it, you know, given the fact that the range is 0 to 1,000, and typically you'll see it's from 500 to 1,000 probably on just about each line item, I kind of figured, well, that's not as important as maybe looking at the potential suspension or revocation. And so it might be good to just kind of walk through some of those, because that's a much more substantial penalty at the end of the day. And we really, when you said we can't go above 1,000 unless a rule change, and it doesn't seem to make a lot of sense to request a rule change right now for this type of item. And so if you look at, I printed them, so I'm not sure if first page and last page.
May I ask you quick before
Sure.
we get into all that, what constitutes a per day violation? If it's $1,000, you can say, well, they did it for 30 days. I mean, is that how do you determine the length of time? Let's put it that way.
I think you'd have to be able to show in a hearing that this happened over a period of more than one day. So if you can do that, you could assess a penalty of up to $30,000. That isn't something the board has done, but your authority would be, you would be able to do that if you can show that the violation occurred over more than one day. So if, for example, someone issues an audit report and they're unlicensed, you can prove that obviously the day that they issued it is a violation, but can you prove how many days after that can you prove that a violation was occurring? So we just have to.
That's kind of my point. Yeah. I mean, is it just one off, or is it? I see what you're saying. I mean, I guess you'll know it when you see it, right?
Yeah.
Okay.
Were they using accounting properly or multiple days?
Like an advertisement or something like that, or
No, sometimes
okay.
if the complaint is filed and we have a date stamp on when they've used it, and then Duke goes to investigate and he has a date stamp 2 months later, they're still using that same designation that they shouldn't. You may have 3 months worth of a time period that you could show that they were in violation.
But 30 is the max?
No.
Or that was just my example.
That was just your example.
Okay.
So $1,000 per day per violation. And then sometimes we have situations like when an audit report is issued, they don't have a permit, they're not enrolled in peer review, you have multiple violations there. And so even if you can't show more than one day for some reason, you would have multiple violations and you could do $1,000 for each of those violations.
Thank you. Thank you, Mr. Chairman.
So we can do this however the committee would like, but again, I was sort of focused on where we were changing for suspension or revocation. Maybe we had it before and we've dropped it. Maybe we didn't have it before and we've added it, as opposed to the dollar amounts of the violation fines. At the bottom of the first page, dishonesty, fraud, or gross negligence, we've added suspension or revocation to the normal violation guidance. You can see it was there in the aggravating. I think that's probably a good change to give us that option in just a normal situation, that it doesn't have to be aggravating. I'll sort of continue on. If there's any thoughts, please stop me. My next page, or the 2 items down, was conviction of a felony or any crime element of which is dishonesty or fraud. We took the mitigating to suspension and then left the next 2 levels at revocation. again, I guess they were all revocation before, so is there really any effective mitigating circumstances if there's not a lower uh, penalty, so to speak? And I think, Wendy, you indicated that with the Fresh Start Act, that may have a bearing on this.
Right. So felony convictions per our statute have been automatic revocations in prior years until the Fresh Start Act. And now we have to consider several factors. We have to make sure that the felony was related to the profession and things like that. And so, in some cases, we have done suspension rather than revocation. So I had changed that based on prior activity.
Should we consider doing suspension or revocation just to keep that option in there, or does that really matter?
I think that's fair.
I think that's a good change. The next item was performance of any fraudulent act. And we begin with a $1,000 penalty. Normal would be a suspension or revocation. And the last one would be suspension or revocation in the aggravating.
And as an explanation, just the fraudulent act part just is one of the in my mind, a higher level violation than a non-renewal or something of that nature.
Right now, I'm passing over any that did not change, I guess, along the lines of suspension or revocation. So if there's something anyone had noted. Several 3 lines down, violation of the terms of any lawful order entered by the board. We have $1,000 change there, the changes to $1,000 in the mitigating, revocation under the normal, and revocation under aggravating.
As an explanation on that one, whenever an order is created by legal, there is verbiage in there that once they sign that order, if they don't comply with the terms, there's an automatic revocation. And so that is why we moved the standard to revocation, or why I recommended that. And on the mitigating, I believe it might be CPE that we don't include that wording. There's one of them, I believe it's CPE, that we don't include that revocation language.
It's worth noting that a lot of the aggravating factor penalty levels include a suspension or revocation. And probably, certainly, they have the $1,000 fine if they're in that category. I didn't see any on the next page, and then I had one more. 5 lines from the bottom. False, misleading, or deceptive advertising, solicitation by use of coercion, overreaching, or harassing conduct. And we added suspension or revocation in the aggravating factors category. And then up the dollar amount for the normal. So that's just sort of a run through on those. I guess at this point we can say we think all this makes sense, or do we need to look at it further and come back and talk about it again? Do you feel like we've changed enough at this point to maybe satisfy the board's request to take a look at it, and particularly, like I said, to look at the actual actions like suspension or revocation where appropriate? And I think we've had a pretty good effort at those, it looks to me. I do agree with the change that Gay suggested, the item about conviction of felony, suspension, or revocation. Thoughts, questions, concerns? Like to take a stab at approving this at this point, or consider it further?
I'll make a motion recommend to these changes that have been identified, including the one change to the conviction of felony to accept a suspension or revocation.
I'll second.
Have a second discussion? I would just ask, Wendy, would it be helpful if we identify which rule or item that was that Gay has sort of changed from what has been presented, or clear enough to describe?
Probably should say it on the, I believe it's ECA 62-1-111A8 and Rule 0020-01-14G.
Yes.
Let it be for revocation.
Go back and incorporate that in.
I'm going to take the motion to that language of the statute and the rule.
Okay, I move that we recommend to the full board to accept the changes presented to us, except for the penalties related to TCA 62-1-111A8, Rule 0020-01-014G, and we show that as being suspension or revocation, the mitigating factor.
I'll second that again.
Now we have a new second. Have we got any further discussion? No. Aaron, would you take a roll call vote?
John Griesbeck,
Aye.
Janet Booker Davis,
Aye.
Pam Church,
Aye.
David Crenshaw,
Aye.
Gay Moon,
Aye.
Chairman, I'll turn it back over to you.
Thank you, Mr. Chairman. Wendy?
So it has come to our attention that the live streaming is not working. They can update it if we take a break. So could we take a break before the next?
I think we need to take a break. What do you think? Let's take a break. Thank you.
Thank you.
This meeting is being transcribed. This meeting is being recorded.
All right, welcome back. I understand now that we are live, and so we're back together. The next committee that is going to meet is our laws and rules. Is our enforcement. And so today, Kevin Monroe, as we all talked about at first, he's not going to be with us today. So we've asked Mr. Greg Gilbert to step in and to be chair for the day, or for this, or these meetings today and tomorrow. On that committee with Chair Gilbert will be David Crenshaw, Larry Elmore, who will be voting and attending online, and also Rob Vance. So with that, I'll turn it over to Chairman Gilbert.
Thank you, Mr. Bonner. Whoops. Thank you, Mr. Bonner. There we go. You have in your package a case and complaint report, and I thought we might just look at it quickly. There are 19 cases involving individual licensees and 13 cases involving CPA firms, and most all of those are in legal investigation stage or litigation monitoring. And I did not see anything out of the ordinary, but comments? I think there's no action that we take on this report, correct, Wendy? So that's informational, and we will present that at the board meeting tomorrow. So now we'll move to the October 2023 legal report. which of course is in your package. And I would like to thank Neil for the work that you've done on this, Neil, as well as Duke and Wendy for all of your input. And also, I think it's important for the committee and for the board to know that Chairman Monroe has reviewed all of the cases and has offered his comments. And I think we've made the changes that he suggested. And then I've done the same, and Neil and I have corresponded some, and we've made a few changes. So, having said that, we will work as we have in the past by the types of cases. So the first 12 cases are under the consent agenda, and it seemed to me for this report that we have a higher number than usual, maybe of non-licensees. So we will consider that as we go through the cases. Case number one, or item number one, case 2023-026671 involves an unlicensed individual. A complaint was filed based on a social media post regarding an award for, quote, best accountant, unquote, as recognized by a local community civic organization that named respondent as, quote, best accountant, unquote. Respondent is not a licensed CPA. The investigation revealed that respondent owns her own business performing tax and bookkeeping services, and she did not nominate herself for this recognition by the private civic group. The term accounting is not in the title of respondent's business. However, in emails from respondent used the terms lead accountant / owner in her email signature block in 3 separate emails to the department. The terms lead accountant / owner were located directly under respondent's name in each of the emails. And you have in your legal report the TCA sections mentioned there. A mitigating factor in this case is that respondent was cooperative and expressed concern that this could have an adverse effect on her as she hopes to sit for the CPA exam sometime in the future. Respondent asked for the statute reference where the use of accountant is not allowed by non-licensees, and that information was sent to her. The recommendation from counsel is a letter of instruction. Thoughts?
My only thought is, it seems like we have 2 cases that are similar to this.
Correct.
I think we should send a letter to the private civic group and inform them of what the rule is, so they shouldn't be nominating people and getting them in trouble. Does that make sense? Can we do that? Like a letter of it, or at least a letter of explaining to them that they're nominating these people that sort of getting them in trouble? I mean, am I wrong about that?
I would not agree with that, because that's taking away some recognition that a bookkeeper or tax prep person might be entitled to. And I think the second case, the person had not done anything wrong. I mean, I don't think the second person had identified themselves as an accountant or anything. And I mean, you work hard and you provide a service whether you're licensed or not. And if the community wants to recognize you as such, I would kind of hate to take that opportunity away from that person.
Maybe they could call it something else.
Well, that was kind of my point. Is that, like, I don't want to be called, the greatest lawyer in town, because I'm not. Or the greatest legal mind in mind. But, anyway, that was my point.
So, Neil, would you need to research that to see if that would be appropriate? I think we can stick with it. Right now, we're talking about penalties or potential penalties against individuals,
right,
and not civic organizations, but we could possibly draft something to an organization.
Unlikely that I would recommend doing that because you don't have I'm not sure that we have a basis here to really even do that when we're talking about a civic organization that's not a respondent. And there's been not sure that that would be, with them not being a respondent and no basis to do that against the organization. I don't think I would recommend doing that.
You're not suggesting that it's anything against the organization, just as a, by the way, we've received some, well, however you want to frame it, that people have been nominated as best accountant, and maybe tell them the rule. They're probably just not aware of the rule. I mean, I wouldn't see anything wrong with making them aware of the rule.
And that's my point.
It's not penalizing the civic organization. It's not to do that, right?
I mean, they're using the term incorrectly as well.
Exactly, yeah.
I mean, that's my point.
Yeah.
They're calling these people accountants, and they're not.
Right.
I mean, that was my point. Yeah. Thank you.
Yeah.
I'd have to look into that.
Let's roll that. Just move on.
I just think I kind of agree with Neil. We're kind of stepping out into an area that we really don't have any say in. The laws are the laws. I may not know all the laws in the state of Tennessee, and I may accidentally violate something by accident by saying something to somebody, hey, you're a great this or you're a great that. But I don't think it gives that organization the right to come after me for just making that statement.
I also think there are organizations and entities, I think, and I'd be interested in input on this, but that use maybe the term accountant in a title for someone that wouldn't necessarily fall under our statutes and rules as a violation based on the context of that term.
I mean, but we aren't trying to go after anybody. It's just letting them know some information that they may not be aware of. I guess I don't see anything wrong with advising somebody of some information that they may not be aware of. It's not going after them.
If the board wanted to open a complaint, that's probably the only way to really pursue any type of, if you're wanting to do any type of disposition or look into, would there be enough there to do a letter of instruction or a letter of warning? Probably the right way to go about doing that would be if the board has concerns that the civic organization has violated rules, then the proper way to go about that would be to open a complaint against them as a respondent.
Hopefully the respondent will just tell the community that, hey, this type of award to somebody who is not a licensed accountant may not be appropriate. And leave it at that.
If they keep doing it, then other people may be getting in trouble in the future. Yeah. That's my point, is that they're unintentionally or dragging people into this process. So now the first one I can see, they did call themselves an accountant. I get that. But
some of these polls are done at the newspaper level where you just kind of, the public votes on it. I can't think of a faster way to get mud on my shoes to say something here.
I think in the end, we're not disciplining anyone for that. The only reason that there's a suggestion for a letter of instruction is because the individual did it on their own and not, we're not attempting to discipline somebody for something the civic organization did.
I'm wondering if either the number one or number two person let the civic organization know kind of the consequences. And maybe the civic organization will consider rephrasing it next year. But regardless if you're licensed, if you're a good bookkeeper, tax preparer, I wouldn't want to get them, not let them have that opportunity for being recognized for good service.
It's very possible that the civic organization is aware, because if you look at the last paragraph in the first case, a mitigating factor in this case is the respondent was cooperative and expressed concern that this could have an adverse effect on her. I would suspect that she has mentioned that to the civic organization, but I don't know that for sure, of course. Okay, so the first case, we recommend a letter of instruction. The second case, again, as we've already jumped to, very similar, except the respondent did not hold herself out to be an accountant in any type of the letterhead or any other correspondence that we've seen. So the recommendation there is that we close the case. Comments? Okay. Case 3 deals with an unlicensed individual. Complaint alleges that respondent identified herself as a CPA on a social media account. Complainant provided several screenshots. The screenshots did not specifically mention respondent's name, but there were references made on 4 dates that are listed. Attempts to follow up with complainant failed, but the investigator was able to reach respondent, who advised that she has never identified herself as a CPA or held herself out as a CPA. She works for a bookkeeper for an organization. She has a degree in accounting, but has never sat for the exam. Respondent acknowledged she operates the subject social media account and stated it is a parody account, which I had to research because I'm naive enough to not know what a parody account was on social media.
This meeting is being recorded and or transcribed.
Pam Church.
And again, it appears the only area where respondent identified herself as a CPA was on her social media account. And a mitigating factor is that when contacted by the investigator, respondent was remorseful and acted quickly to remedy the issue with her social media account. And counsel recommends closure. Comments? Okay. The chairman indicated maybe I should have read the case number. Item number 2 was case 2023-024-801. Item 3, which we just discussed, was case 2023-028-791. Thank you, sir. Item number 4, case 2023-021-541. Complaint was filed by former client of respondent who alleged respondent withheld complainant's QuickBook files when complainant switched CPAs, and respondent failed to send the QuickBook files to complainant's new CPA when requested. Respondent disputed the allegation that the records were not provided, and respondent provided emails that indicate the records were provided. Respondent never agreed to provide the files in QuickBook format, and respondent stated that the complainant's new CPA requested and received files from respondent that were downloaded into Excel format and emailed to complainant's new CPA. Respondent stated that she purged the QuickBook file after she sent the records to the complainant. Once per year, as a matter of practice, respondent purges QuickBook files of QuickBooks of old client files and maintains paper copies of the records. When the investigator interviewed complainant's new CPA, the new CPA confirmed she received the records via email from respondent and that the records, including the trial balance and general ledger. Complainant's new CPA confirmed she received all necessary records from respondent, but in Excel, not QuickBook format. We have a board rule that's listed in the legal report regarding records and providing those to former clients. And then, at least the way my pages break, the next page, we have the AICPA Code of Conduct, an excerpt from the Code of Conduct that states, in part, the member may make the requested records available in any usable and accessible format. However, the member is not required to convert records that are not in electronic format to electronic format. Respondent's delivery of records to the complainant and to complainant's new CPA in Excel format does not violate the board rule noted previously, as the board rule is silent regarding the format in which the records must be provided. Further, it appears there is no violation of the AICPA Code of Conduct, as respondent timely provided the records in Excel format and no longer possessed the records in QuickBook format. The recommendation is that we close the case. Item number 5, case 2023-030-401. The complainant alleges respondent did not exercise due professional care in the performance of his professional services as they pertain to his role as CPA and treasurer of a nonprofit school. There are several items noted in this briefing. and I will read part of those to you as I have on the others, of course. But respondent states that complainant statements regarding lack of due professional care and objectivity are inaccurate and untrue. Respondent states that complainant's claims center around one subject: the school board of directors' decision to sell a real estate holding. Respondent states that he was a volunteer board member of the school and that he was not engaged to perform any professional services. He merely acted as treasurer, assisting with reports related to revenues and expenses, and that he helps school staff with bookkeeping processes and budgets. Respondent submitted numerous letters from school board members in support of his statement that seemed to refute complainant's claims and dispute the allegations. One letter from a former school board president disagrees with complainant's claims and states that respondent was trusted completely by no less than 4 board presidents, including himself, to steward the school's finances. Interestingly, the investigation revealed that the complainant is a former school board member and is a realtor who acted as the listing agent for the initial purchase of the subject property, but was not the listing agent when the property was sold. The school board received several bids from local realtors to list the subject property. The appropriate board committee reviewed and considered the bids and ultimately proposed to the board that the bid provided by respondent's real estate acquaintance, and the bid was awarded to that person, again, who was respondent's acquaintance. Respondent was not a realtor. The evidence does not establish that a conflict of interest existed or that there was improper or self-serving relationship between respondent and the real estate acquaintance. Concerning school's finances, evidence reveals that the school board reviewed all relevant financial documents and had them reviewed by an attorney. The evidence does not establish that respondent provided false or misleading information to the school board for the purpose of inducing the sale of subject property. As the evidence does not establish that respondent violated any accountancy statute or Board of Accountancy rule, council recommends closure. Comments? Okay. Item number 6, case 2023-034-661. This complaint stems from a divorce matter where respondent was engaged by the attorney for complainant's former spouse to provide a valuation of 3 Subway restaurants owned by the former spouse. Complainant alleges respondent did not provide an accurate valuation of the 3 restaurants and intentionally misrepresented the numbers to create a lower valuation. In response to the complaint, respondent confirmed he was engaged by the attorney for the complainant's former spouse to value the sole proprietorship for 3 Subway restaurants for purposes of property settlement for the divorce matter. And then there were some issues regarding using income tax information and cash flows and so forth, but all of that is typical in these type of cases. The matter was sent for investigation. When contacted by the investigator, complainant repeated statements made in his complaint. He believes expenses like depreciation should not be included when calculating income. Of course, as most of us know, that valuations are different than income tax returns. Respondent's valuation report was detailed and lengthy and provided his valuation and the methodology used to calculate the valuation. Respondent went into granular detail while referencing appropriate guidelines to explain his rationale behind the valuation. And as you see in the report, respondent has numerous certifications related to business valuation. The complainant did not retain his own expert to compile a financial valuation, which would be a common practice when there is a property valuation dispute. Based on the information provided, especially by respondent and the thorough reports, council recommends that we close this case.
Can we pull this one out of the consent agenda?
Absolutely.
So I can recuse myself from
Absolutely.
it? Thank you.
Mr. Vance, I will ask you, though, do you have any comments on the valuation methodologies as you've seen in the report?
Well, well, first of all, in terms of it being a divorce, I'm surprised we don't get more of this. It seemed to be an extremely well responded case. Whoever this is knew what they were doing, in my opinion, and it was the fault of the complainant to not get their own valuation done. And all the things that they complained about were normal processes. I found this to be a waste of time, in my opinion. So, thank you.
Any comments?
Agreed on the methodology too. Sounds like they should have gotten their own valuation.
Item 7, case 2023035771. Complainant alleges her organization hired respondent to complete monthly financial reports. Respondent states that she was hired by complainant to provide monthly bookkeeping services in August 2021. Excuse me. Respondent states that she worked for complainant until December 2022. At that point, she instituted a price increase, and complainant refused to pay the increased price for services. The matter was sent for investigation. Respondent advised that her initial response to the complainant that complainant owed fees was mistaken and complainant did not have a balance due. Respondent did, however, state that she had already provided all applicable records to complainant. When contacted by the investigator, complainant advised that complainant was going through a 10-care audit, and the auditor requested copies of the general ledger for 2022. Complainant asserts they only received balance sheets and income statements from respondent and never received copies of the general ledger. And then you see some information about Board Rule 0020-03-.111(1)C. A licensee shall, upon request made within a reasonable time, furnish to his or her client or former client, in part, a copy of the licensee's working papers to the extent such working papers include records which would be ordinarily constitute part of the client's books and records and not otherwise available, excuse me, including but not limited to general ledgers, general journals, fixed assets, and so forth. The evidence is not clear as to whether respondent provided the subject records to complainant, as complainant is adamant that they never received the general ledger, and respondent states the records, including the general ledger, were provided to complainant. There's also an AICPA code of conduct that's cited in your information. When a member is required to return or make records available, the member should comply as soon as practicable, but absent extenuating circumstances, no later than 45 days after the request is made. Again, the evidence is not clear as to whether respondent provided the subject matter to complainant, as complainant is certain she was never provided the general ledger, but respondent provided an affidavit stating that she provided the general ledger and other accounting records to complainant monthly. As such, counsel recommends issuing a letter of instruction reminding respondent to utilize a detailed engagement letter and maintain clear communications with clients when, where, and how records will be provided. And the recommendation again is a letter of instruction. Comments? Okay. Item number 8, case 2023036281. This is case is based on an anonymous complaint that alleged complainant requested paper copies of all years that respondent filed taxes for complainant, but respondent allegedly refused to provide copies of the tax documents. We'll see just a little later in this case that those documents had been provided previously, and this was maybe at least a second request for those documents. In response to the complaint, respondent stated that he believed the complaint was filed by a former client of his, and respondent did provide that former client copies of tax returns he had filed for her. Respondent stated that the former client called him before this complaint was filed, asking him to send the former client more copies of her tax returns. Respondent then reminded the former client that she must pay the balance due before respondent would send her any more copies. During the investigation, respondent provided contact information for his former client to the assigned investigator, as respondent suspected that the former client was the one who filed the complaint. Investigator contacted the former client, who denied making any complaint, but later the complainant admitted that she was the one who filed the complaint. When reached by the investigator at least the second time, the former client indicated that she will not pay respondent for copies of records that she wants relating to tax year 2016. The investigator informed the former client that respondent may not have the records from 2016, and respondent is not required to retain records from that long ago. The former client then admitted that respondent had already provided the records to her. The former client has not provided any credible evidence to support any allegations of misconduct on the part of the respondent. And the recommendation is that we close the case. Okay, case item number 9, case 2023-038761. This deals with an unlicensed individual. Complaint was opened after it was alleged that respondent provided an attest report without a requisite CPA license. Respondent serves as treasurer for a nonprofit organization and is not a licensed CPA. Respondent issued a one-page report concerning a nonprofit charity's account. In the report, respondent reviewed fundraising expenses, disbursements, check register, receipts, and bank statements. In the report, respondent utilized the terms reviewed, review, findings, conclusion, and stated his opinion regarding a factual accounting to determine funds were used properly. In the report, respondent stated, in my opinion, the check register and bank statements represent a factual accounting, but respondent makes no mention of the financial statements as a whole or any GAAP, generally accepted accounting principles. Somehow, news of this report reached a local newspaper, which published an article that stated the nonprofit had released audit results. Respondent never stated he conducted an audit or any other test service. In your material, you will see TCA section 62-1-113H1, which states that non-licensees may not use language in any statement related to the financial affairs of a person that is conventionally used by licensees in reports. However, Board Rule 0020-04-.061 states that non-licensees shall use the following language in connection with financial statements and not be in violation of the Act. One is, I've prepared the accompanying statements, and I have not audited, reviewed, or compiled under professional standards, and so forth. The respondent violated the statutes and rules when he used the language of review and opinion regarding the statements regarding a factual accounting. Respondent also violated the statutes and rules when he used language in his report expressing his opinion in reference to bank statement and check register to express assurance as to the reliability of information. While respondent's actions constitute violations, it appears respondent was misinformed about what actions he could take and what actions he should refrain from taking. As treasurer of a not-for-profit group, as part of the report, the evidence indicates respondent only verified the bank statements to the check register. This would not be considered an audit, but rather a rudimentary explanation of a check register and bank statements. It appears that respondent played no role in asserting to the media that his report constituted an audit, nor is there any evidence that respondent ever asserted to anyone that he had completed an audit. According, counsel recommends the board issue a letter of warning. Thoughts? Okay. Item 10, case 202307. Case number 2023037251. The complainant stated that they have been in contact contact with the respondent since 2019, been in contract with the respondent, I should say, not contact, and that lack of communication from respondent led to a delay in obtaining approval of complainant's budget. According to complainant, the start date for the audit field work was changed by respondent multiple times. Respondent countered the allegations by stating that the complainant did not have a competent accounting staff and any delays were caused by the complainant's failures to provide a complete set of financial statements and reconciliations. The investigation revealed that there were problems with the complainant's financial statements and reconciliations as stated by respondent. The investigation also revealed that problems existed due to complainant's accounting staff and lack of personnel to address the complainant's accounting issues. The audit has now been completed and has been provided to the Comptroller's Office. While the complaint alleges there was scant information from the respondent and that information from respondent was sporadic, respondent provided numerous emails where complainant was advised of specific items needed to complete the audit. The investigation did not reveal any evidence to support the allegation that respondent failed to act with due professional care when working on complainant's engagement. Complainant acknowledged they received the audit report by the extended deadline, and they were responsible for the accounting deficiencies that caused the delay. Consequently, counsel recommends that this case be closed. Good with that? Item number 11, case 2023-034391. Complainant alleged that his tax returns and or extensions were not filed timely, and this led to significant fines and penalties. Complainant asserted that respondent has been his company's CPA for several decades, and respondent's work consisted of tax returns and annual financial statements. Respondent informed complainant that respondent would not be able to complete assigned work by the tax due date and would file an extension. There were some penalties involved in this case from the IRS, and those penalties basically related to non-payment or late payment of taxes. Respondent provided a detailed response where she denied the allegations and provided date-specific details of interactions with the complainant and several attachments to support her statements. One very important fact is stated in the paragraph that says concerning complainant's claim. So I'll read that part too. Concerning complainant's claim that respondent advised him incorrectly regarding company bonuses, respondent stated that complainant missed the bonus payment by November 15th, 2022 deadline, and thus respondent advised him to make certain estimated tax payments. The complainant disregarded those instructions, which ultimately resulted in penalties being assessed. Respondent stated that the IRS notices issued to complainant were not related to respondent's failure to file the extension, but were related to complainant's failure to pay the amount due. During the investigation, respondent advised that the office manager for the complainant abruptly resigned, leaving a void in the accounting function of the complainant. Complainant has continued to allege that respondent did not file tax return extensions, but the evidence indicates something to the contrary, that the extension was indeed filed, and that was provided to our investigator. Respondent stated that she had advised complainant on several cases that even though extensions had been filed, estimated tax payment was required to be paid. During an interview with the investigator, complainant referred questions regarding the matter to his acting CFO. When asked about the claim that the respondent advised him to make tax payments when the extensions were filed. Complainant could only vaguely recall one incident where respondent advised him to mail something by 4 p.m. The evidence does not establish a lack of due care or lack of competence on part of the respondent. However, respondent should be reminded that she should explicitly state in any future letters of engagement that it is the responsibility of the client to pay the estimated tax due in the event an extension is filed. The recommendation is a letter of instruction. Council further recommends the board open a separate complaint to investigate whether respondent's actions complied with principles of independence based on respondent's statement that she prepared the financial statement of complainant's company and performed a review of those statements. Thoughts?
I have a question about that last recommendation. Maybe I kind of got lost in some of this, but why is this person violating independence? Allegedly.
There was evidence that she prepared the financial statements of the complainant's company and performed a review engagement of those same statements.
Correct. Yeah.
What does it mean? What does
engagement.
prepared mean? I guess. What does that mean? I mean, produce them internally for this. I'm confused as to what this issue is.
So in the engagement letter, she advised that she was going to prepare the financial statements based off the records that are provided to her by the organization. She had to have a final trial balance. And then it states explicitly that she will prepare the financial statements. And then the next bullet point is then based off that she will do a review, provide a review report.
Oh, Rob, if I understand this correctly, you get folks correct me, but you can't prepare the financial statements and then you're not independent if you do prepare the statements, and so you could not then review or audit those statements.
I guess I'm confused with the word prepare. I mean, what did this person physically do there? I'm sorry. Do they work for the entity?
No, she's not an in-house accountant for the entity. No, she was engaged, if you read the engagement letter, to prepare the returns and then to prepare the financial statements and a review report.
Are they using some type of accounting software to produce these financial statements? I understand what you're saying, Rob, that prepare can be.
I think that's why it's just a recommendation to open another complaint, because we don't know all of the details. This came out as a side thing based on this complaint. That's not what this complaint was about. And it just kind of came out as part of the investigation and a separate issue. So I don't know that, Duke, you have the answers to all those questions.
Not at all. That was kind of my fault at the end, because I was so engaged in the original complaint item when we kind of talked about this in our legal meeting. I completely didn't look at the engagement letter close enough to acknowledge, to recognize that in the engagement letter, she was engaged to prepare the financial statements, and then she was also going to do a review report. And so after we had kind of done, it was kind of like, well, do we need to drill down a little bit further on what does it mean to prepare, and then how can you be independent to do a review report?
I don't do financial statements anymore. Am I incorrect? Can this person not perform a review? I mean, I don't understand what the issue is. I mean,
correct me if I'm wrong, Mr. Committee Chair, but I think it's at a high level. It's, if you put them together, you can't then just do the audit or the review on what you put together.
So start with a trial balance, physically put the balance sheet and P&L together. That means prepare. Okay, is that what we're saying? And then they're going to review it after they just physically put it together?
Yeah, and I think a lot of times, especially in the smaller practices, you're just giving your CPA your bank statements, and then they're putting together a balance sheet and P&L. And then that same CPA can't perform an audit or test services on those financials that they've put together for you.
I think I see the issue now. Thank you.
So council's recommendation, first of all, is letter of instruction. Are we okay with that? That, again, the allegation was related to, or complaint was related to penalties related to an extension, effectively. The second part of the recommendation is the us potentially opening a separate complaint. You okay with that?
Can I ask, I'm not on this committee, but when we open this case up, if she, there's that level of, I can't remember if it's SARS or what it is, where it's not a compilation, where an opinion is provided, and I don't know what the engagement letter said, but you're basically putting together a balance sheet and income statement, but you're not offering an opinion, and the engagement letter may have been talking about that. And then the review process, it could have been that she was going to make sure that expenses were put in the right categories. So I don't know. I don't know if you want to put in a case or if you want to do a little more looking at what that engagement letter said before we put a case bring a case against somebody. Of course, you could just close it, but that was a scenario that I could see happening, especially in a small firm where you're not doing the full compilation, but you're doing that. And Janet, you may be able to talk about that SARS thing as opposed to a full-blown GAAP compilation, and then just making sure that expenses are appropriately categorized. I mean,
I think it depends on what they were engaged to do as to whether it gets into an independence issue. And I was trying to look back to see if it gets into further issues of is this person in a peer review, if they were going to be engaged to in a review engagement. It seems like we don't have enough information to know, and maybe we do just need to get more information.
And Janet, not to interrupt, but to your point, the last line of the recommendation does say review engagement with respect to those statements.
Yeah, so there might be some peer review issues.
Yeah, and just within the engagement letter, there was an interesting, kind of bullet point within the engagement letter was there was an understanding that the report would not be released to anybody without the respondent's permission. So a review report looks like may have been done, but it wasn't allowed to be released unless there was permission provided by the respondent, which was unusual for me to read that. But I so if a review report's done but nobody sees it, and then why would you have it? And that's my big question. So.
Did you offer an opinion on the review report?
I didn't see the review report. It was just in the engagement letter what she was engaged to do during this year for the issue that came up. The engagement letter was provided by her. As I recall, she referenced SARS in terms of that was going to be the guiding of what she was going to do.
So that's a kind of a level down from a GAAP compilation that would require a peer review. No, the SART. I mean,
I think what you may be talking about are the preparation standards.
Mm-hmm. Is that what I'm thinking about?
I think so.
Because the compilation requires
the compilation does, but there's that other level that's
that I think is a preparation standard.
When it's for management purposes only.
Yes.
Yeah.
And you have to say that you're not independent. Is that one of those?
Yes.
Say that.
Okay. I think they came in after I stopped doing financial, so that's why I'm not completely familiar with that.
Mm-hmm.
So
I don't think there's enough information on it, so I do agree that we need to go back and look at
So would we like table this one to get more information?
My understanding is that that's what the motion is saying, that we want to potentially open a claim and investigate further.
Well, I don't know about opening another claim.
I mean, if we do this, I mean, if we open this, is that negatively going to affect them? If we come back later and say that there was no fire where the smoke was?
If we do more investigation and there's nothing there, then it would show up on the next legal report as a closure.
It doesn't negatively affect this person per se?
No, it is public record that there's a complaint, but that's how we handle complaints. Meaning, if we have an issue that comes into us, we open a complaint to look into it. So we don't do a lot of investigating outside of the complaint process.
So investigating whether there's an independence issue here that would be outside of this complaint process?
Yes.
Yes, I think the board, if you agree, action.
So you say you can't do this informally to make sure we understand what this language was in the engagement letter? It sounds like there's a little bit of confusion. Duke sounds like he's not confused, but I don't know. It just sounds like there's a little bit of not really sure what's going on here kind of thing.
Complaint has to be opened for him to do an investigation. And what we're saying as a board is that we think there's evidence here to open up a complaint at the board level so that he can do the investigation, say, agree or disagree, and come back and offer some opinion.
Okay.
We also have to be careful. I think we've put some words in Duke's mouth that maybe weren't there. You just said a review engagement. The engagement letter addressed a review, correct? Under SARS, yeah.
So, okay. All right.
That would give us reason to open up a separate.
Okay. Thanks.
Are we okay with the recommendation, Rob? Okay. Okay. Case 12. I think this is the last of the consent items. Case number 2023-040391 relates to a special purpose acquisition company audit. This complaint was based on orders filed by the Securities and Exchange Commission, the SEC, and the Public Company Accounting Oversight Board, PCAOB. Respondent was charged with numerous audit deficiencies within their special purpose acquisition company practice. When we did some research, the investigation was open to determine if any of the alleged activity occurred within respondent's Nashville office, and respondent stated that consistent with its settlement of the orders and outside the context of a proceeding involving either the SEC or PCAOB, respondent is not permitted to provide a response to the findings in the orders that could be construed as a denial or admission of the findings. In this particular case, lack of evidence establishing a jurisdictional nexus connecting the violations to Tennessee favors closure. Based on the above, it is requested that the captioned investigation be closed with no further action. Comments? Duke, I don't know if there's anything else you could provide that would be of help to us.
No, that was pretty much it. When I reached out to the general counsel, they told me that there was a confidentiality agreement between them, and they made no admissions or no denials regarding the order from the PCAOB.
Comments? Questions? Okay, so at this point, what I would like for the committee to do is to approve all of the consent agenda items 1 through 12, with the exception of item number 6, which relates to the valuation. Rob, which you recused yourself from. So I suppose we have Mr. Elmore on the call, so we need to do this by roll call, I think. Correct? So would you do the roll call, please? Oh, there's there a second?
Yes, second.
Second, sorry. There we go.
David Crenshaw,
Aye.
Larry Elmore, hi Larry, I believe you're muted. Greg Gilbert,
Aye.
Rob Vance.
Aye.
I can see that Mr. Elmore is answering yes.
I will tell. I was checking my text too, because periodically he will text me something. But this I think is very relevant for Neil and Duke. I totally agree with your comments regarding the work done by Neil and Duke. These write-ups were very thorough and easy to follow, much improved. So, thanks, gentlemen. Okay, so we're good with cases 1 through 12, except we've not voted on 6. Is that correct, Karen? We've approved those. So, at this point, I suppose we need a motion and second for case to approve case number 6.
So moved.
And I think I could second that motion. Is that your understanding of Robert's Rules of Order? Because Mr. Vance is recusing himself. So
Correct.
So maybe, Wendy, do you have a question or a comment on that?
No.
Okay.
I don't know what the rule is.
Neil, do you know?
Whether you can second.
Right.
Chairman second the motion.
I think the chairman can make a motion. I don't know for sure about seconding a motion, but okay.
I think yes.
We could move on and let see if Mr. Elmore would second the motion. Maybe, could we give him time and maybe just move on and don't let me forget to come back? He's seconding? Okay.
Okay, great.
Okay. So we have a motion and a second. Now roll call, please.
David Crenshaw,
Aye.
Greg Gilbert,
Aye.
Larry Elmore. Aye.
Thank you. Okay, now we will move to the proposed discipline cases, and there are 2 of those. We can vote on those individually, I suppose. Item number 13, case 2023040541. This relates to an unlicensed individual. Complaint was opened by the board based on a review report, a test service issued by respondent that was presented to the Tennessee Board of Licensing Contractors. Respondent does not hold a CPA license or firm permit, nor is he enrolled in peer review. Sometimes in these cases, we might issue a $750 penalty against the firm and also $750 for not going through peer review. In this case, we have an individual who's not licensed, so really is not subject to those rules. But the council's recommendation is that we assess a penalty of $1,000. So if it were a licensee, would probably be $1,500, but this is an unlicensed individual who's not really subject to our peer review rules and so forth. That's since Mr. Elmore is not with us, let me change, and if it's okay with the committee, we'll just vote on these two cases together. Okay. So number 14, case 2023025601. Complaints were opened by the board against sole proprietor and his firm after it appeared respondent issued a compilation report while holding an expired firm permit and without being enrolled in peer review. When interviewed by the investigator, it was revealed that respondent is a sole proprietor S corporation operated by one individual. Respondent admitted that respondent's firm permit expired December 31st, 2020, and explained that deficiencies had been identified during a peer review that needed remediation. While respondent had been registered for peer review at some point, respondent did not remediate the issues identified during the peer review, and thus respondent was removed from peer review. Respondent advised the person who had been assisting with peer review requirements passed away, and respondent expressed frustration with trying to identify someone else to assist with peer review matters. The investigator provided respondent the name and phone number of a contact at the TSCPA to assist respondent with peer review questions. Respondent has contacted TSCPA to pursue registering for peer review and wants to reactivate the firm permit. There are several rules that are listed in your case write-up. The mitigating factor in this case is the respondent was cooperative during the investigation, expressed remorse, and did not deny the allegations. An aggravating factor in this case is that respondent's issues with peer review have been ongoing for several years. For reasons unknown, respondent was unable to communicate with TSCPA for guidance regarding his deficiencies. And I would note that and give some weight to that. That's very unusual for the TSCPA to not respond in these situations. But anyway, respondent was unable to communicate with TSCPA for guidance regarding the deficiencies. Moreover, respondent issued a compilation report when respondent was aware the firm permit was expired and the firm was not enrolled in peer review. Council recommends a civil penalty of $1,500, one violation at $750 for not undergoing peer review, and the other for a firm permit violation. So council's recommendation again, authorize a formal hearing with the authority to settle via consent order upon the respondent's payment of a civil penalty of $1,500. Council further recommends that the board require respondent to agree not to perform attest services until respondent comes into compliance with peer review requirements.
I'm not sure you read the second case number. There are two case numbers associated with 14.
14?
Yes.
Thank you, Rob.
5611 number. I could be wrong, but I don't think I heard you.
5601.
No, it's 56. There's a second one, 5611.
Okay. I'm sorry, you're right. 2023-025611 is the number against the individual licensee. The firm number, that case was 2023-025601. Is that right?
Yes.
Thank you. Good with the recommendation, council? Any other board members? Okay, so if possible, I would like to have a motion and a second to approve the two cases under the proposed discipline section, items number 13 and 14.
So moved.
Second.
Thank you both. Roll call.
David Crenshaw.
Aye.
Larry Elmore. Greg Gilbert.
Aye.
Rob Vance.
Aye.
Okay, thank you. We have two more cases. Both are representations. Number 15, case 2023011921. This complaint was opened after the Tennessee Board of Contractors Licensing received an independent auditor's report issued by respondent, and it appeared respondent did not possess the firm permit in Tennessee. Respondent's address is based in Mississippi. This complaint is related to complaint number 2022-05196, which was presented at the May 2023 meeting, this board's meeting, and resulted in a consent order with civil penalty of $1,000, which has been paid. In this particular case, 2023-011-921, the respondent has not answered, has not responded, and after some work by our staff, the respondent is located in Mississippi. The Mississippi Board of Accountancy has interest in pursuing this case, and so, well, first of all, our initial recommendation was that we authorize a formal hearing with the authority to settle via consent order upon the respondent's payment of civil penalty in the amount of $3,000. And now the respondent is a resident of Mississippi and has been non-responsive to us. And again, Mississippi has interest in pursuing this matter. So council's recommendation is that we close this case and refer it to the Mississippi State Board of Public Accountancy for investigation and disposition. And I think we probably better vote on these two cases individually. So I have a motion regarding item number 15, case 2023.
So moved.
So moved. Second? Second. Roll call.
Renshaw.
Aye.
Larry Elmore.
Aye.
Greg Gilbert.
Aye.
Rob Vance.
Aye.
It's good to hear you, Larry. Okay, the final case, item number 16, case 2023-000-191. Complainant states under Rule 1.100-001 of the AICPA Rules of Professional Conduct, in the performance of any professional service, a member shall maintain objectivity and integrity, be free of conflicts, and not knowingly misrepresent facts or subordinate his or her judgment to others. In this particular case, we have a lawsuit. Respondent's attorney states that it is unfortunate complainant has attempted to gain an advantage in an ongoing civil proceeding by filing for present complaint. Investigator confirmed respondent and complainant were currently in civil litigation. And at that point, we recommended that the case be placed in litigation monitoring. The new information since the May 2023 board meeting, the parties have attended court-ordered mediation where the lawsuit was settled for a confidential amount. The context and background to this complaint are outlined as follows. Complainant alleged that a lack of proper cybersecurity protocols by respondent led to complainant suffering a significant financial loss, as there was significant breach of the complainant's bank account wherein respondent's username and password were used. The investigation revealed that respondent, as part of the civil litigation, engaged a cybersecurity firm to examine her network to determine if a breach of complainant's bank account occurred within respondent's network. The firm's report, which was provided by respondent, showed that respondent's network was not improperly accessed to breach complainant's bank accounts, nor was respondent's network the source of the breach. Respondent also provided an expert report that reviewed respondent's conduct during her engagement with complainant and whether there were any violations of the AICPA Code of Conduct. The report found no such evidence. The recommendation in this case is that we close it. Comments, questions, thoughts? Chair would entertain a motion to approve. So moved.
Second.
Second. Roll call, please.
Bob,
Aye.
Harry Elmore,
Aye.
Greg Gilbert,
Aye.
Rob Vance.
Aye.
And one other item of note, during the past couple of meetings, we've addressed a case where there was a significant civil penalty that we assessed. And I think the respondent has now agreed to the civil penalty. And in fact, I believe it's been paid. Is that correct, Wendy? So just an update for you. Mr. Chairman, I believe that's all the business of the Enforcement Committee for today.
Thank you so much, Mr. Chairman. Thank you for stepping up and acting for us today, given the fact that our chair was out of town. So we appreciate it very much. Job well done. We now go over to the Executive Committee. We have to pause here, if you will, and allow us to say this. Currently, the Tennessee requirements require boards to have a quorum present in order to have a meeting. We have had the other three committees where we met those requirements. In the Executive Committee, we actually have one member who's not here and another member who is via virtual. And so the virtual does not count. So we don't have a quorum, and we're not going to be able to proceed with that. What we will do tomorrow is we will bring this before the entire board, and we will talk about the state-specific ethics course and the travel, and then also go over the fiscal year 23 budget and the closing amounts there. And so we'll just say, everybody just take a second look at that tonight. Everybody was given all the information as normal, and tomorrow we'll discuss that in our board meeting. So we will go ahead and ask if there's any other items for which we need to do today.
Mr. Chairman, I'd just like to make sure that we have a few minutes for any public comment. I don't see that we have anyone in the room, but if there's anyone on the phone that would like to place a comment or in the Teams chat, we can certainly take any questions at this time if there's anyone that would like to do so.
Karen, let us know if any comments come through.
All right, it's tight.
Sarah with the TSCPA has joined us virtually. She is traveling and so was not able to be present, but we'll give her a chance to say anything.
Thanks, Wendy. Can you hear me?
I can.
Good afternoon to the board from Los Angeles. I'm waiting to board a plane, so I'm sorry that I can't be there with you. I do, just on behalf of TSCPA, I want to express our appreciation to the board for supporting the credit relief initiative. We believe that's a great opportunity to hopefully re-engage some individuals back into the pipeline. So thank you for your discussion and your support of that today. We greatly appreciate that.
Thank you. We appreciate you and appreciate what all the work that Tennessee Society does, Karen. And we hope that you have safe travel and look forward to getting back to Tennessee.
Thanks, Andy.
Any other public comments that we might have?
Do you see anything, Karen? I think that concludes any public comments that we would have.
Well, given the fact that, do I have any other comments from the board or any other committees today? Given that fact, then I would say that I would like a motion to adjourn today, and then we'll get back together tomorrow morning, 8:30 for the board meeting. Do I have a motion?
So moved.
Do I have a second?
Second.
All right. All those in favor?
Aye.
All right. Thank you very much. And thank you to everyone who's here today, especially our staff and Karen for all she does to electronically get us into these meetings and record them. And so we'll see you in the morning.
Pam Church.